Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
Let's see what Max Chafkin has to say. Bloomberg Businessweek senior reporter. He's also co-host of the Everybody's Business podcast, author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. He joins us right here in our Bloomberg Interactive Broker studio. This is Peter Thiel's company. What are you making of this? It sounds like just gangbusters.
Yeah, I mean, this is a company where you have a couple of trends working in its favor. One is, and we heard it mentioned earlier, AI. Palantir is marketing itself as like essentially a way for big companies to incorporate artificial intelligence in their workflows. That's obviously something lots and lots of companies are spending huge sums of money on. The other thing is this is a big defense contractor, and it happens to be, and you mentioned Peter Thiel's name earlier. He's co-founder of the company. It is a company that is very close to the Trump administration. So it's both a company that is sort of well positioned in its government business, at least in the U.S., and well positioned in its commercial business. So you're seeing revenue grow. Now, I think what you see skeptical analysts say, and this is a company where there's a bit of a divide between how professionals see it and the kind of masses, who are trading, on platforms like Robinhood. I think a lot of analysts feel like this stock is wildly overvalued. You're talking about, even at $4 billion of annual revenue, it's not a huge amount of money for a company that's worth like $500 billion in terms of market cap. But for now, the market likes it. This has become, it's almost a cliche to say, but it is a meme stock. It is both a company that has a real business, but also a company that has this very, very, dedicated following.
Why would you call it a meme stock? I mean, you kind of answered the question right then. You said as a dedicated following, but this is a company that has an increase in revenue of 63%. Analysts on average estimated a $1.09 billion in terms of revenue increase, went to $1.18 billion. Average projection of $1.19 billion for sales for the current quarter. That the company says it'll come in at $1.33 billion. There's some real numbers here that I think critics would say, okay, well, meme stocks don't have those kind of fundamentals. Yeah,
I mean, it's different from like, haha, this is totally a joke. And that's not what I'm saying at all. What I'm saying is that the demand for this stock is happening at the retail level, just like Tesla Motors, where you see, that, which is another stock with similarly like very elevated price. The price to earnings ratio on this company is huge. It's really, really high.
It's 691. The forward PE, excuse me, is 320. I mean, like what you said before about how much in revenues and what the market cap is, it's going to take a lot of growth over and over
just
again
for context,
for multiple quarters.
NVIDIA's PE ratio is 60.57.
Yeah, so even for a tech company, even for a high growth tech company, we're talking about a very, very, very expensive stock. And that, that stock either reflects the kind of new dynamics that certain equities are trading at, where if there's demand on social media, and the Bloomberg story that was published gets into some of this, investor Alex Karp, the CEO of Palantir, is this kind of almost like a cult-like figure, a cultural figure, certainly. Shareholders call him Daddy Karp, and he has these antics, right? Like he is this kind of larger than life figure. There is also a business story. It's not like it's totally just hot air, right? The idea is that artificial intelligence is becoming more and more important. Palantir is positioned well.
What exactly do they do, Max?
They build software that essentially makes it easier for companies to organize their data and make decisions. Now, the thing most people have probably heard most about with Palantir is the military and intelligence agencies incorporated software in their sort of in like searching out terrorist cells and that sort of thing. Now, there's a lot of debate about just how sort of automated this is, how important it is, but it is a piece of software that is being used in more and more big companies to handle data. And that's a valuable thing, because like once the software is being used by a given entity, it's kind of hard to take it out. It's this kind of same dynamics that protect lots of sellers of enterprise software.
Max, this is a company that was founded back in 2004. Facebook was also founded back in 2004. I think a lot of people would say this was kind of a late bloomer. For a lot of years, it kind of just like got by until then suddenly it was on everybody's radar. Why was it so slow to grow?
Well, I mean, it took them a very long time to sort of figure out a product. And the company was founded essentially with the idea of providing intelligence gathering software to the military, adapting some of the security tools that Peter Thiel and his co-founders had used at PayPal and applying it in other areas. That was the pitch. It took them a really long time to find a customer base. But once they did, and as they've been able to kind of build a brand and take the company public and benefit from some of these trends that I'm talking about, these cultural trends, it's gone very, very well.
It's interesting too. I'm looking at the FA page on the Bloomberg. So at the end of last year, about almost 55% of their revenue was government, and then about 45% was commercial. And I'm just thinking, like, who they compete with, right? Like Microsoft, Amazon, Google, and then some of these data specialist companies out there, whether it's Snowflake and others. I mean, is there somebody who could ultimately, take over their business? I mean, or do they really own their niche?
No, there are other players in this space. I think a lot of those competitors, companies are buying both Palantir and Microsoft. It's not like you're buying one at the expense of the other. Palantir is, I think, very recently got into some litigation with a copycat product. There are other companies that are attempting to offer sort of similar kind of like data integration services. We've also seen critics over the years sort of say, like, this is actually a consulting company kind of masquerading as a software. There's a lot of debate over just how much it is like a product company and should be valued that way. Although, of course, like on Wall Street, or on the stock market, that debate is long gone because it's being traded, at multiples that are much higher than even some very, very successful software companies.
How big of a deal is it that this administration has or members of this administration have been aligned, at least philosophically, with leadership at Palantir?
I mean, if you listen to Palantir, they're going to say, no, this is not political, that the government is just choosing our product because it's the best product. I think if you look historically, the last Trump administration was an incredible time for Palantir. The company grew a lot. It managed to go public, won lots and lots of contracts, including taking some contracts from some other big tech companies. And if you look at what has happened over the past, whatever it is, 10 months of the Trump administration, it's great for Palantir. You had this obviously the Doge effort, we haven't heard much about it, but like the idea of building these databases that are better going to integrate information across different agencies, that is like right up Palantir's alley. And you're seeing Alex Karp show up at the White House, show up at these dinners. They are punching above their weight in terms of influence.
We should point out, though, shares of Palantir now down about 0.25% here in the aftermarket. So they've definitely pulled off their highs of this session. Hey, Max, thank you so much.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let's see what Megan Horniman has to say. She's back with us. She's Chief Investment Officer at Verdance Capital Advisors. Firm has more than $4 billion in assets under management. Once again, with us from Hunt Valley, Maryland. Megan, good to have you here. It has been quite a bounce back from the lows back in early April. How do you describe the market environment right now?
I think there's a lot of over-optimism about several things. We did get the Fed that cut rates, and that's what really, the markets were focusing on prior to September. We got the Fed cutting rates. We got 2 of them this year. The jury's still kind of out for the December number, but we also have seen some thawing in the trading tensions since that, April tiff, I guess, tariff tiff. And now you have the AI taking back over again. So you have this momentum trade that's driving these markets higher into the year end here.
Worried about valuations?
Absolutely. We are very worried specifically from the Mag 7, the technology. These are all looking a little bit bubble-like. I'm not saying this is a dot-com bubble, but there is the risk here for some valuation correction. Keep in mind that these valuations have driven higher on this, pricing imperfection, the perfect soft landing of the economy, the perfect fix to inflation, and the Fed coming in and easing policy. This is something that's really up in the air into 2026, that there is no certainty. And I think the Fed was pretty clear about that when they mentioned that the December meeting is not a foregone conclusion.
Megan, you say it's not akin to the internet bubble, but
it's bubble-like.
But it looks bubble-like. But why do you say that? Is it, what we always hear is, well, wait, there's companies that actually have revenues and earnings, and I get that. But the company that I feel like is the nucleus of this AI trade, OpenAI, we have yet to really see their books, right? It's a privately held company. They're tying up with everybody. There's this massive spend. It's hard not to feel like this is a bit heady and wonder where it all ends.
Yeah, and you said it exactly. There's not a lot of clarity. This is what we're seeing is just more this euphoria around this changing technology. And we completely believe in that. And AI is going to change the way we do a lot of things. It's going to make a lot of things efficient. But we've seen this before in other market bubble type of situations where the markets just have this overly optimistic view. You can even go back to some of the times when people said, oh, home prices will never go down. Yeah. We heard that in the 08-09 crisis. So go ahead. I'm good.
Well, the one thing I wanted to ask you about with the AI trade, and like I said, there are companies, and we know with the hyperscalers, where we see an ROI. And we were just talking with our own Mandeep Singh about some of the numbers that we've seen. I think it was specifically, was it in Google and so on. So we do see payoffs. But having said that, the other thing we were just talking with a member of the Google and Alphabet team is about jobs that could be lost, whether it's in coding and other places. If we have an economy where a lot of people are put out of work and there's a dislocation, be it for a year, 2 years, 5 years, 7 years, who knows, maybe a generation, that's got to be a problem, no?
Yeah, I think, but we're not as negative on what AI can do to the job market as some people are. Let's keep in mind that some jobs will be replaced by AI. These may be some clerical type of jobs, but then if you look at a lot of other areas in this market, in the labor market, some of these jobs may just get better. Productivity, efficiency will just improve by the use of AI. So I'm not ready to say that this is a really detrimental thing to the labor market going forward. I think that it can actually help improve quite a bit.
Okay, so how do you advise clients what to do in this bubble-like environment that we're in? Sit on their hands and do nothing, or move a little bit away from some of these Mag 7 companies?
Yeah, absolutely. First of all, look at your allocation. Are you overweighted to these Mag 7, to these growth sectors? Because keep in mind, just the market movement itself may have you allocated to this a lot more than you should be. So rebalance. And I know that may seem kind of boring, but it's the end of the year. Rebalance portfolios where you think is necessary, where it's overrun. The growth technology names, these are the most at risk. So any of these big high flyers that you've seen this year, those with really high multiples, these are the ones that we would start reducing. Make sure that you're more diversified than just holding on to those, because what we have seen in historical pullbacks or corrections in the market, that sometimes when there's a valuation correction, the biggest winners are the ones that get sold, because it turns into this indiscriminate selling where you're selling all the winners. So be very careful there. Make sure that your portfolio is balanced where you want to be, and don't be overweighted a substantial amount to these growth and technology large cap names.
And then, yet, having said that, those large cap tech names are the ones that continue to, provide, you see the growth, top and bottom line, over and over again. And it's kind of interesting that everybody's like, wait, time to back off. And then we see once again another quarter or another year where that's where the momentum is. So how do you be smart about not just chasing maybe gains that won't happen, or realizing the reality of our world is a big tech world? And you look at those companies and they are part of really almost all of our lives in a big way.
Mm-hmm. Yeah, just be careful of what you're paying, the price that you're paying for these names. Are you paying for earnings that are now 2 years forward? And that's what we see when you look at the S&P 500, which is primarily your Mag 7 stocks. You can see that earnings estimates going out to 2027. You put a reasonable valuation on that. There's really not much upside if you're looking at the fair value of the S&P 500, and that's in 2027. So just be very careful what level of earnings you're paying for and how far out, because there is a lot of uncertainty between now and 2027. So be careful paying up for that momentum.
You're happy with earnings thus far?
Thus far, yes, earnings have been great, but let's also keep in mind that earnings tend to beat the estimates between 3 and 5% every earnings season. I'm more concerned about what we see for next year. And then now that we are starting to get some of those estimates for 27, what are people looking at going forward?
What do you think is the biggest risk in a week where we have the Supreme Court taking up a case against President Trump's tariffs? If that gets undone, what would that mean for financial markets?
I think the markets are looking for any kind of news because we don't really have the economic data, obviously, with the government shutdown. So they're looking for any catalyst, whether it's to the upside or downside. Unfortunately, we think there's more downside risks in the near term.
But if that tariff gets undone, what would that mean for financial markets? Just got about 20 seconds.
I think just volatility, instability, because then we've all got to go back and kind of reprice what the tariff expectations may be. So, and then what will the Trump administration do? What's the next lever that they may have to pull in order to get the tariffs through?
It'd be kind of messy, that's for sure. All right, Megan, thanks so much.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Ryan Gould is a Bloomberg News U.S. IPO and deals reporter. Red Brown is Bloomberg News consumer reporter. They both join us here in the Bloomberg Interactive Brokers studio. Kenvue surging as much as 20% earlier in the session. Kimberly Clark falling as much as 14.5% earlier in the session. Now down just 14%, but still, investors are sending the message. When I heard this news this morning,
like,
I'm thinking to myself,
where did this come from?
Well, we're on the call. We're on our editorial call, and I'm saying, who wants to deal with the litigation that Tylenol could potentially see as a result of being front and center in these comments that President Trump and RFK said at the White House earlier this year? Red, Kenvue is not just Tylenol, it's Zyrtec, Listerine, Band-Aid, Neutrogena, and more. But what's the litigation risk here for Kimberly Clark?
It's obviously it's hard to say right now. Like, this is a very fast moving story when it comes to Tylenol. Like, we have just that one lawsuit right now in Texas. There's been some asks, some petitions, some consumer petitions to have label changed on Tylenol as well. But I think what you're getting in the reaction in Kimberly Clark's shares today do kind of underline that is what is on people's mind, right? Is this legal risk? There's an argument to be made that like Kenvue is a really great property. Like, Tim, you just named off all of those like marquee brands, right? So, I think there's a kind of a consensus among the analysts that this is probably a long-term play, like potentially maybe getting a really good deal here, considering how poorly Kenvue shares have done so far this year. That's not just the legal risk; it's also just kind of bad performance as well. But remains to be seen, I guess, on this legal risk question.
We should remind everybody, this is the consumer products division of Johnson & Johnson. It was spun off back in 2023. Shares have struggled this year. There's the Bayer Monsanto situation that one analyst brought up, Carol, earlier today. Red and company writing that Vital Knowledge's Adam Crisafulli said that there could be concern about whether the Kleenex maker is getting itself into a Bayer Monsanto situation, referring to Bayer's acquisition of Monsanto back in 2018, which laden the German pharmaceutical company with legal costs. Coulda,
woulda, shoulda. Like, we have to see how it plays out ultimately. We should point out shares of Kenvue are down 23% year to date. Ryan, come on in on this. I mean, they are paying a 46 premium to Kenvue's closing price on Friday. Mind you, the share price has been beaten up a little bit. What's the thinking? What are you hearing from bankers about why this has come together and why now?
Well, just on the Bayer Monsanto piece, I think, it's something that we're also hearing this morning. I think depending on who you speak to, I think on the Kenvue side, there's a view that you could in no way make that comparison. These are very, very different types of companies. I think, we were just talking about the litigation risk, but at the same time, I thought it was really interesting. And I think Mike Su, the CEO of Kimberly, was out this morning saying that, and in the statement, that the world's foremost scientific or medical, regulatory, and legal experts had kind of concluded that, this is something they need to go for. I mean, to go on the record saying such things so publicly, I think is one thing. But the other piece of this is that, there's a massive dispute within Kenvue as to what the actual liability is. And so depending on who you speak to, I think there's a view that there could actually be no liability at all, which, that's going to be for a court to decide and maybe not for me to speculate on, but that's what this comes down to, which is why I think you can have people come out and say things like, this is a generational value creation opportunity.
But they're talking about it, that there is potentially a liability issue, the folks at Kenvue.
Yeah. Oh, no, for sure. And I think there's, a couple of people I was speaking to kind of said that they would probably take the under on, exactly how much market cap Kenvue has lost in this whole debacle vis-a-vis the liability that they'll end up with. That's one view. But, you could also say the flip side, right? Because who knows how this is going to turn out. And, this could be a case study in at HPS in a few years' time.
So we should point out that Kenvue at its highs up almost 20% in today's session, as much as $17.18 a share here. Reed, come back in on this, because I do wonder, is there anybody else who might come in and say we're interested? Or not necessarily?
I haven't heard anything on that. I'd be interested in what Ryan has to say on that bit. But there was a lot of interest in the company. Like I said, it is marquee brands. Tylenol probably chief among them, despite some of these risks that they did that are overhanging that unit. But the company has all of the pieces to do well over the long term, and I think that is why there is the conviction that this has good long-term potential. And then just on the legal issue there, as Ryan makes the point, they have the top scientists going in and speaking with them in the room. This is not a surprise that this issue is kind of going on in the background. So
I think what I would say, just in the dynamics of this, and Carol, to your question on whether we'll see an interloper or not, take the fact that this had not one, but two, but actually three activists in the stock, Star board chief among them. July 14th this year, the company announced the replacement of the CEO, replaced the CEO, and then said they were going to explore strategic alternatives. Doing that at the same time as having a hedge fund hotel in your stock, we kind of make this point in the Deals newsletter today. I think the process was very robust.
Okay.
And so, there were definitely multiple parties around this situation.
Kimberly-Clark, known for diapers, toilet paper, Kleenex. They also have ingredients and some of the brands are like Scott, Cottonelle, Viva, and more. Huggies. Kenvue, known for, of course, Tylenol, but also Motrin, Band-Aid, Benadryl, Desitin. I'm just trying to think of this, quote unquote synergies, which oftentimes mean job cuts. But there's some back end stuff. There's some distribution stuff. But how do these brands come together, Ryan?
I think that's a really interesting question, because I asked someone this morning who is around this deal, exactly how are you defining the synergies? I mean, is it cost? Is it strictly cutting cost? I think Kenvue sees this as, they see a massive upside in keeping the brands together. I know that there was interest in Listerine, for instance, on its own. And I think there were other pieces where you could say there was a standout buyer. But I think as you think about this combined company, I think it's probably a location factor. It's a supply chain factor. And I think it's about concentration of suppliers as well. And so, yes, paper is, they had the Kimberly-Clark is obviously making Kleenex, but, Huggies has that's solvency, absorbency paper factor too. So.
Yeah, I would say the shelf space is kind of similar, but it's good to have some different products, right, to kind of fill those shelves.
Oh, definitely. I think during the investors presentation today, one of the things that I found most convincing was this regional discussion. I don't know if Kimberly-Clark has a great presence in India. And that was one of the points that that both CEOs made during the call. As an example, they used the potential synergies is that Kenvue has 1.3 million, I think that's the correct number, of distribution points within the country. And we all know that India is a fantastic market to be in with the potential growth there. And it doesn't seem like that's right where Kimberly-Clark has presence yet. Another example they used was Singapore, I believe. Again, Kenvue doesn't have a smoking cessation business there yet, where then Kimberly-Clark Kimberly-Clark has a robust supply chain there. So like
Kenvue makes Nicorette.
Exactly. Yeah, exactly. So there's the potential there to just kind of use those existing distribution channels and, potentially increase the marketing around some of these new products that Kimberly-Clark is picking up.
It's kind of fascinating in a world where we spend so much time talking about, the AI build out in data centers, Red, that it's just, these are products that we all use, right? And no matter what, we're going to use them. Good times, bad times, we might trade down a little bit, but these are things that we use all the time.
Yeah, no, it's a great point. And I think probably was what kind of underlining a little bit of the conviction here from Kimberly-Clark.
I think, did I come into this year thinking that Kimberly-Clark acquiring Kenvue would be the fourth largest M&A deal?
It's a big deal.
No,
probably not.
The fourth largest in
this year.
This year.
Far
It's pretty
announced
remarkable.
this year. I mean, you've got OpenAI, NVIDIA, which we at Bloomberg classify as a deal. You could sort of make two ways about that, but Norfolk Southern being acquired by Union Pacific, second, and then you've got Electronic Arts being taken out by the Saudis, and then this. So, sign of the times, maybe, I don't know.
Stay with us. More from Bloomberg Businessweek Daily coming up after this. You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Their next guest, a player in the industry, the company reporting earnings later this week. Adam Goldstein is founder and CEO of Archer Aviation. It's the $6.7 billion market cap aerospace company that trades under the ticker ACHR. He joins us from San Jose, California. Archer designing and developing electric vertical takeoff and landing aircraft, eVTOLs, for use in urban air mobility networks. When are Carol and I going to take one of these to Newark Airport? We're flying out tomorrow. We're both taking cabs.
Well, it's great to be here. The industry is actually, as you said, it's been around for a while and it's getting pretty mature. So the good news is that in June of this year, President Trump issued an executive order that'll mandate really the speed of these being brought to market. So by next June, you should expect to be seeing these aircrafts flying in and around the big urban cities. 5 cities are getting announced. They'll be announced in January. They'll be flying in June. And so that's when you'll start to see them flying around in the U.S.
Flying in June without passengers?
They'll start piloted with just no passengers.
Okay.
And the goal is to ramp operations there through the certification program.
So go back to my original question, which is really when we will be using these as easily as we can hail a cab using Uber or Lyft.
Yeah, it's hard to say. It's really, the company's job to build the safe airplanes and then the FAA's job to certify. So our hope is soon after that period of time when we're showing that these aircrafts are safe, we're showing that there's a really good consumer experience. And overall, we've gotten a lot of, buy-in from community acceptance.
Are you having active conversations with the FAA right now?
Yes. So there's constantly active conversations. Of course, the government shutdown, kind of created some slowdowns with that. But the conversations continue, and it's been ongoing for a very long time. We have longstanding relationships there, and the programs are very, very well established. This is a priority of the administration. That's what the executive order in June was all about. And so this is one of those programs that I think does get a lot more attention. But we kind of punch above our weight as an industry. And so, they've been very good to us so far.
So what is your definition, Adam, of commercial operations, and exactly when do they start, meaning revenue generating passenger flights? I just want to clarify.
So Archer has 2 sides of the business. We have a civil business, which is moving around, and a defense side of the business. On the civil side of the business, we have a 2-pronged approach. There's an international strategy and a domestic strategy. On the international side, we've been working very closely with the UAE and the UAE government. And specifically, the largest helicopter operator in the Middle East is called Abu Dhabi Aviation, which we've partnered with and has acquired aircraft. So we've already started to receive dollars from that. We'll start to recognize revenue first quarter of next year. And so that's when you'll start to see some of those numbers come in. It'll be very small, though, to start, and then we'll ramp that over time. On the defense side of things, the contracts have to be announced. And so that still hasn't happened yet. There's a lot of talk, and I think the programs are starting to, firm up, and there's a lot of excitement around new, what they call autonomous and attritable aircraft. But those programs have yet to be announced. We're hopeful that those will be announced soon.
So my understanding, too, going back to the stuff you're doing in Abu Dhabi, so that launch was the first, correct, of your company's launch edition program, and was supposed to be kind of the playbook for Ethiopian Airlines and in Indonesia. So lessons learned so far, and how is it among those lessons being learned changing the future rollout?
Yeah, those are great questions. Launching in the UAE, or really just the broader GCC, has provided a lot of lessons around weather. And so, of course, it's very hot there. There's a lot of kind of harsh conditions with a lot of sand in the air. So we've learned a lot about how to keep these aircrafts cool in very, very hot weather, not just the interiors for consumers, but actually like the safety of the aircraft. So that testing, I think, has been hugely helpful. And so you start in one of the harsher environments, you can work our way to some of the more mild environments like here in California. And so that's provided a lot of the sort of base layer lessons for operating in really difficult conditions. But the goal is really to just continue to get reps, learn, figure out how these aircrafts will get to market. The good news is they're all based around safety. And so multiple sets of propellers providing multiple sets of redundancy. And so I think we can deliver a really high quality, safe product.
From an infrastructure perspective, Carol mentioned that we have to have infrastructure in the right place. I'm wondering if there are cities in the US that work right now or do not work for this type of technology.
Yeah, well, I've had my sights set on Los Angeles as sort of the best city, I think, in the U.S. for this platform. There's so much traffic in Los Angeles. There are over 5 million daily trips that take greater than an hour by car, going less than 20 miles in Los Angeles. So an incredible city to offer this type of platform. So last year we announced the LA network, which really started to show the different points of interest. So partnerships with SoFi Stadium, with Woodland Hills, with USC Coliseum. So places where there already is existing infrastructure, heliports that are there, and we'll start building that network up. Of course, we have the Olympics coming in Los Angeles in 2028, where we're going to be increasing the infrastructure that gets built in and around the games. And Archer was announced as the exclusive air taxi provider for that event. So Los Angeles is a perfect city to go launch this. But of course, there's other great cities like New York, Miami, and San Francisco that I think will be also great places for us to launch. But pretty much anywhere they use helicopters will be great for this product.
So exclusive air taxi partner for the Olympics out in Los Angeles. So that means you're going to actually be flying folks around?
That is certainly the goal. So the goal is to move VIPs, dignitaries, fans in and around the games. We have been partnering very closely with LA28 to do that. I'm confident in that goal. We'll be able to get there. It's a super exciting time for the industry. That's actually a goal that was set out by the FAA back in 2022. So they coined the term Innovate 28, which was the first city where you'll see these aircrafts used in mass will be at the LA28 games. So that's an alignment that the goals were put out there a while ago, and we hope to deliver against that.
Do you feel at all that investors, though, are feeling a little bit of fatigue from kind of the repeated delays in the start of revenue generating passenger flights? I mean, the stock's up about 7% year to date, but you look at the chart over the last year, it's like a rough EKG. It's a little tricky. So I'm just wondering, are you feeling like investors, I think it was back in 2021 that you guys slated the launch of a taxi launch service in Miami and LA by 2024. So I get it. You want to get it right. You want it to be safe. But do you feel like your investors are getting a little antsy? Just got about 30 seconds. Then we're going to take a break and come back and talk a little bit more.
I would say it's actually quite the contrary. And that's not just an Archer statement. I think that's an industry statement. So one of our peers and one of my good friends, Kyle Clark, is IPOing his company called Beta here. I think it's supposed to price this week. And from what I've heard is the thing is massively oversubscribed. There's tons of demand. So I think there is a ton of interest in the eVTOL space. I think the investors are very excited about the progress that we have. And I think that'll continue to pay off.
Hey, one thing I want to know, Adam, is progress on pilot certification. Where are you guys on that?
So the certification process is a long one, and this is actually the first new category in a very long time. First new category in 60 years at the FAA. So it's a new process really for everybody. And there's two sides. You have to figure out the rules, which they call policy, and then mix that against the execution. So showing that the aircrafts are safe against that policy. So we're deep into the policy side, nearly done with that, and then starting to work on the execution side of that as well. So the goal is to grind through that. But what I think the better proof points, rather than trying to understand this kind of black box certification process will be the executive order from President Trump, where we'll start to see these aircrafts flying next summer in and around these cities. That's really the point where we can help gain the consumer confidence, consumer awareness of what we're doing, and ultimately showcase these aircrafts are safe in and around urban environments.
Adam, we're in a world where we're trying to remove humans from the equation, whether they're Uber or Lyft drivers with Waymo and Tesla's cybercabs, or with other elements in warehouses with robots and Amazon. Do you envision a future where Archer does not have pilots?
Well, we are deep also in the autonomy process in aviation as well. There are lots of autonomous solutions that exist. In fact, we've flown the aircrafts autonomously many times. That being said, I think the difficulty in aviation is in and around the regulation and in and around how the aircrafts will operate with the existing environments. So how will air traffic control communicate with these aircrafts if they're autonomous? How will they land with the given infrastructure? So I do think we will get there. I think they will start out piloted and then work their way into the autonomy stack. I do think it's new companies like Archer that will actually invent those autonomy stacks and really try to create the network that's necessary to deploy autonomous aircrafts, but still more to come on that.
All right. And look forward to hearing more from you in the future. Adam, thanks so much.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.